Thank you and welcome back. Halftime was great. Here goes third quarter action. It begins right now. It's 31 degrees. Today is cloudy early in the morning, then sunny finally. I guess we had a little bit of sun the other day, but sunny this afternoon. High 42 today. Winds north 15 to 25 miles an hour. Tonight, clear skies, low 26. Coldest it's been in a while. Winds north 5 to 10 miles an hour. Tomorrow, sunny, high 50 degrees. Winds south-southeast at 15 to 25 miles per hour. This portion of Early in the Morning and this program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program each week are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast. They are subject to change without notice. Neither the information that you'll hear provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck will join us in just a moment. Let me give you an idea of some of the things that we're going to be talking about. Obviously, Chuck will give us, as he always does, a great update on our financial markets. I'm going to ask Chuck if he'll entertain a question that I have. He'll talk about the labor market. Interesting to note, for the first time in a while, actually the unemployment rate ticked up 0.1%. We'll get Chuck's take on why that happened and how the job market is faring. Chuck is going to talk about manufacturing this morning. He's going to talk about the Fed. He's going to talk about GDP and corporate earnings. We're going to get all this in within the next 39 minutes. And then right after Chuck, we have quite a segment in store for you. I think it's a really important topic, and I don't think it gets talked about enough, and that's Alzheimer's disease affecting many, many people. And obviously not just the person that has Alzheimer's, but the family members, the caregivers. And there is a very eye-opening survey that we're going to be talking about with two extremely relevant players in this field and the key findings about the financial damage that strikes for the people that are caring for the relative or the friend with Alzheimer's disease. So it's not just the tragedy of watching someone slip away where they literally lose their ability to remember things, but also the financial issue. And also, if Chuck doesn't mind, what I want to begin with, because I want to make sure that we cover this. I covered it. We covered it with Mayor Guardian in the run-up to Chuck Malamut's arrival. And now I want to get Chuck's take on Atlantic City's rating cut to what Moody's is calling Puerto Rico levels. And Chuck Malamut joins us now. Good morning, Chuck.
Good morning, Harry.
How are you, my friend?
I'm doing great.
What do you think about what Moody's had to say,
well,
Chuck? That
Harry,
was not good news.
It certainly doesn't come as a surprise. Moody's is one of the renowned rating agencies, and their job is to analyze and analyze and analyze.
So they'll take a look and say, state, city, not resolving conflict, so then there is the risk, the financial risk that is a byproduct of it.
Well, look, I think, you've covered the story very well. Extensive interview with the governor and the mayor, and the fact of the matter is, and I don't take this the wrong way, but this is playing politics at its finest moment.
Oh, it's political chicken,
and unfortunately, it's impacting obviously the residents of Atlantic City. It's impacting all of us as residents of Atlantic County, plummeting real estate values, significant unemployment levels. I mean, you chatted just a second ago. The national average is at 5. I'd love to be at 5 here, but the fact of the matter is that we're down to the 11th hour. I think that you have obviously two different stories, and hopefully, Harry, in a relatively short period of time, because there's not a lot of time available to get to some kind of resolution, no one's going to be happy.
Mayor Guardian just acknowledged they have bought until June, and this is without the new lawsuit. I think that Mayor Guardian raises a good point. If you have a state representative there and they've been paying exactly 1 month late for a year and 3 months now, and suddenly they're being sued for not paying the school district, and then the school district is on record. The board president made a public statement. We don't want this lawsuit. We're working with the city, and we don't want to spend money, when we don't need to. They're paying us, and we have the money. One of the things when I was a board member and I was the chairman of finance, Chuck, I had to read a statement. It's not even something you could paraphrase. You had to read a statement that adequate funds were available to meet all the district's obligations. You had to make that. It's the law that you had to do that every meeting. And we were able to do that. I presume the city has been able to do that because they've been operating under this 30-day late pay type deal, kind of like if you were paying your car exactly 30 days late for a whole year and 3 months. I don't think they're going to come and repossess your car, on April 1st. Because they might call you and say, hey, is there a reason, do we need to talk? Is there a reason you're paying exactly 30 days late? But so there's all this stuff going on. But I don't think it's impossible, though, that even though the state has a representative there and they've been approving the 30-day late pay deal from the city to the school district, the state is taking this to court. And who knows, a judge that wants to be a Supreme Court justice, a judge that wants to get reappointed. I mean, I'm not, being a wise guy here, but they could easily get an order to show cause, and a judge could easily rule that you have to pay it now. You can't wait till May. You have to pay it now. What a mess that would be.
Well, Harry, that's if that in fact happens and that's the final, and that is the ruling, then the old story, death by 1,000 cuts.
The lights go off, man.
It's over.
Yeah.
And it's obviously it's a very, very unfortunate situation. I mean, it's going on way too long. I find it simply amazing that our government, and I'm going to put whether it's you put the blame at the doorstep of your governor.
Some put it at the blame of the
city,
the speaker, the assembly speaker, who
so,
won't post the takeover bill. Chuck, I think there is, if you get dispassionate about it, ladies and gentlemen, there is a legitimate battle here, not just politics, a legitimate battle, because Governor Christie, in my groundbreaking, definitive, still to this date, the most comprehensive remarks that he has made anywhere on the topic of Atlantic City, was last Thursday for 41, almost 42 uninterrupted minutes. It was unprecedented. And in fact, a leader just texted me during the news break saying that the interview was unbelievable in his estimation, and which I appreciate this person, especially in their position, saying. But Chuck, you could legitimately say, hey, it's politics, and a lot of people will just say, you're right, it's politics. But Governor Christie's point is he cannot fix Atlantic City without being able to open up all of the collective bargaining unit contracts. He doesn't want a partial. We've had the partial deal, is his statement, and it doesn't work. The only way to fix it, and he has been running with his sort of banner, moniker of, the $200 and some $1,000 chief, and the $300 and some $1,000 payout, to a deputy, and all these different numbers that are big. There's no doubt about it. So the speaker, though, who wants to be a United States congressman in 2 years and wants to be a popular speaker in the run-up to that, and just in general to curry favor to unions, he is saying, I won't post this with the state having the ability to open up the contracts. That's the only sticking point right now. The city of Atlantic City will accept a state takeover that does not include the opening up the contracts.
Well, Harry, on a comparative basis, we are just moments away from filing. It's just a matter of when.
But if they file, the state's not going to approve it.
So now, and you kind of look at, from a comparative basis, what happened with the city of Detroit. Two different cities for sure, but the way Detroit was handled was significantly different. And
would you actually say better?
A lot more productive.
Well, look,
than what we're seeing here.
I don't know all the parameters, but I remember, for example, pensioners were really worried they were going to get crushed. Pensioners, I think, took a 5% reduction.
Everybody took a haircut, I think, and now Detroit, in a relatively short period of time, has resurrected itself through tax abatements. And the bottom line, what is happening, they are now attracting a lot of technology, startups, small companies, and Detroit has turned itself relatively quickly. And that's not to say that, to paint a broad brush and the whole city is wonderful. But there's a lot of damage that's been created here, and certainly a lot of bad blood, I guess is the best way to call it.
Here's something
and
else.
A lot of hurt feelings as well,
Oh,
and a lot of people that are obviously financially, devastated as a result of what is happening here.
Very well said, Chuck. And you're listening to Chuck Malamut. We visit, of course, every Tuesday morning. It almost needs no advertising when you do something for 25-plus years. People know when Chuck is here and look forward to it. So do I. And, Chuck, here's the other thing about this, too. Not that I like this exercise, but it has been really illustrative insofar as how politics, government, and our financial markets and financial institutions intersect.
Yeah, so let's schedule a news conference to schedule our next news conference So you think about...
And, of course, the analysts are watching all this.
But you think about, Harry, what a colossal waste of energy and time. If we, meaning government, could get their act together, and I'm going to start at the highest level within the state, and that's where the buck stops here. And, unfortunately, I know that you have chatted previously about how Atlantic City bookings are looking favorably in the future, but
amazingly so.
At some point in time, that's going to end. And this is very, very reminiscent. I remember, growing up, how frustrated my father and uncle were, owning hotels in Atlantic City. And a lot to be blamed at that point in time at the footstep of the city of Atlantic City not so much at the state. That was my sort of takeaway. But having said all that, the political shenanigans and, passing, the football from one side to the other, it's got to end.
I know it has to end, Chuck, but what do you do when the governor says he doesn't even want to take over Atlantic City? It's never a positive thing. But if he's going to take it over, he wants to have total control. So what do you say critical about that? You say, hey, he wants to do too good a job. He wants to actually reduce the salaries. He wants to, to fix the issues, because Atlantic City is now worth a third of what it used to be worth. Or 2/3 less, however you want to put it, worth 1/3 of what it used to be worth. The speaker is now, his position is that he doesn't want employees to get hurt. He doesn't want collective bargaining unit contracts to be open. So you have literally how's
the old expression go, Harry? You can't get blood out of a stone?
Yes.
Okay, so there you go.
Well, there you go. So do you run the game out? Then Atlantic City literally is bloodless. Like the patient, they took a pint, but you know what? I still feel pretty good. I'm not going to win the Boston Marathon down a pint, and the platelets have to recover. But if you drain the body of what are there, 10 pints, whatever there are, what do you do?
In all due respect to the speaker, the fact of the matter is, if you don't have the resources to pay the union contracts, it really doesn't matter now, does it?
Yeah, I know, but still,
right?
Yes.
Okay.
Yes.
Look, I made my case.
So your case is made, which means that this plays, if nobody changes their position, this plays out until June. And then literally the city will not be able to pay their employees, will not be able to pay vendors and operating expenses and all these different things.
Well, I'm not saying that, Harry.
What?
Harry,
I am.
What I'm saying is that if the Speaker of the House does not move this bill forward.
Okay, so now you're putting it on him
because of his political aspirations. Well, I blame Harry. There's something. It's real easy to Monday morning quarterback and blame everybody. Just think last night at the game. If North Carolina, didn't allow Villanova to take that last second shot, then maybe the outcome would have been different. Okay.
Yeah.
But the bottom.
But Arch passed it to Jenkins, and Jenkins went boom, Mr. Chucky.
But the bottom, and that was not to digress here, because this is very important. But by far the best championship game that I've seen in my lifetime.
I was so excited.
But I will tell you that this is this Atlantic City is just getting very, very tiring, for all of us. And especially for those that live in the world that I live in.
It's debilitating financially.
Because you look at it and you say, you have to be kidding me, because now what we're doing, and this is politics at its finest moment.
Then you're Denny Levinson, Jerry Del Rosso, and Diana Ratala, and you're doing 8 budgets.
Which is
you don't even know which one is going to be applicable.
Which is what? A complete waste of time and resources.
But I give them a lot of credit for doing it, and Jerry never goes home, and the guy's burning midnight oil, and he's underpaid. They should find a way to pay this man what he's worth, even in this insane, hateful political insanity.
Remember when the governor came down here for his summits and sort of the takeaways and what we kind of chatted about, and they should do this right now. You take all of the people that are involved in this decision-making process, and you put them in a room and you lock the door until you come to a resolution. There's no more press conferences.
And no air conditioning.
There's no discussion. The public doesn't hear what goes on until you get final.
It'll be like our founders in Philadelphia, stinky, hot. No air conditioning. Everybody smells because they haven't been out, for weeks. And here's the thing, though, Chuck. I know Governor Christie as well as anybody in this area. He's not changing his mind on this. He will not sign the bills if they don't have the provision of giving the state financial control of the employment contracts. He will not change on that. I already know it. He has said it to me on and off air. I know it. The speaker, because the governor and the state Senate president and a majority of the Senate, and now look at this, though. Even like the deputy, if you will, speaker, if you will, it's not quite that title, but the majority leader, Lou Greenwald, he has admonished his own speaker. You have a majority in the Senate that want Prieto to post the bill. Yeah, I'm not shilling for the bill. I'm saying the only way this gets solved is if Prieto changes his stance, because Christie and Sweeney are not going to. And that's why there's all these editorials about Prieto. That's why every day my inbox is getting bombed by Assembly Cruz and Senator this and all these different people, because they're all coming after Prieto to post the bill.
Harry, politics, unfortunately, I don't want to say it's its finest moment. Politics is probably one of its worst moments.
Brief time out. We're going to be right back. He is Chuck Malamut. I am Hurley in the Morning. For all of your financial planning needs, turn to Chuck, the leader, managing director of his group, the Malamut Group, at Morgan Stanley's Northfield office, 609-383-2010. Now, keep in mind, we're already at 23 minutes past the hour. I can't believe it. We're blowing up the show. And we still haven't talked about the market update, labor market, manufacturing, the Fed, GDP, and corporate earnings. It's been all Dateline Atlantic City. We're going to have to shift gears quickly next.
Talk Radio 1450.
Thank you, Glenn. Back 25 minutes past the hour. Chuck, I would be remiss even if I did not thank you for once again, for the 9th consecutive year, our charity golf tournament has never had to pay for a single golf ball. And what we always do in the nice golf bag that each of our golfers gets, they get a sleeve of golf balls, and they're really nice golf balls. And Chuck has always done that for us. Not on top of that alone would be a phenomenal contribution to the charity event. But Chuck, you also are very generous in terms of your financial contributions. So thank you.
Harry, you're welcome. I'm looking forward to the new venue.
A lot of people are. It's a great course. We're really excited. Friday, June 17th, 8 a.m. breakfast registration hour, 9 a.m. shotgun start. Friday, June 17th, the 19th annual Hurley in the Morning Charity Golf Open. Chuck, the market update. Take it away.
All right, so Harry, we have a lot to get through. After you held my feet to the fire for the last 20 minutes, but I'll give you a pass on that one. So. First quarter, believe it or not, is in the books. We are anxiously waiting for earnings, which will be coming fast and furious, within a week or so.
Chuck, did you hear me mention last week? I know I'm interrupting, but did you hear me mention last week that this rally that 2 of the 3 indices had, the greatest rally
it was, and
since 1933?
Harry, you think about this.
While we're talking about all this bad news,
right.
That was impressive.
Well, I think here's what's happened. So with the quarter behind us, a lot of the volatility has cleared the market. I mean, if you look at the equity markets, for the longest time, we were trading exclusively based on oil and how oil traded. So on February the 11th, Harry, we were down about 10.3% year to date, and we put those lows in. It took about five weeks to get there, and subsequently, as we finished up the quarter, we were actually up 1.3%. So it was obviously very, very volatile.
Amazing.
We had price appreciation along the way with oil and in metals, and that helped the commodities index move, higher. And emerging market equities and high yield, two of the more volatile, riskier asset classes, posted the highest gains for the quarter. To give you an idea, emerging markets were up just shy of 6%. High yield was up just shy of 4%. And the big loser in the group was our dollar, the U.S. dollar, which was down almost 4.5% to 5%. So now we're looking. The Fed is looking not so much what is happening here domestically, but what is happening globally. And the comments that Janet Yellen made last week, put the markets at ease somewhat, because there was a lot of I don't want to use the word fear, but there was a lot of concern that within the equity markets in particular, because of the week before, a lot of the hawkish statements that were made by other Fed officials. So, if you take a look at where we are now, this is just a true testament to investors and your listeners that you need at all times to exhibit patience and make certain that you have goals, you've set your goals, and you're looking to achieve those goals. Because, Harry, if you operate by looking at your cell phone or your computer and looking for hourly updates, chances are somewhere along the line between January 1 and February 11th, you probably would have made a move that now you are regretting.
Yeah, exactly. Let's take our halftime break. We're going to be right back. A lot more ground to cover, including the labor market. I have a New Jersey statistic that I think is going to shock some of our listeners. I know Chuck is going to talk at the national level. I'm going to throw in, it'll only take me about 10 seconds, I'm going to throw in a New Jersey labor market statistic that most New Jerseyans, I don't even think, even remotely realize that the number I'm going to cite not only is an empirical, but it's as recent as 2 weeks ago. Chuck Malamut continues, and a reminder for all of your financial planning needs, turn to Chuck, his team. Chuck is the managing director of his group, the Malamut Group, at Morgan Stanley's Northfield office, 609-383-2010. Thank you, Sean Hannity. I am Hurley in the Morning. He is Chuck Malamut. A reminder for all of your financial planning needs, turn to Chuck. You'll be very pleased that you did. Tell him that I sent you Hurley in the Morning, and you'll learn up close at how Chuck and his team, they have perfected their concept of total asset management coupled with the all-important asset allocation. The Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. Are you on labor market now, Chuck?
Harry, I think what I'd like to do, if we kind of jumped around here a little bit, let me go back. Yeah, the labor market's good. So,
well, let me make my comment on New Jersey labor market then.
All right, you go.
We have the lowest level of unemployment in New Jersey since August of 2007. We're at 4.3% unemployment in the state of New Jersey. Resident employment reached an all-time high. This is the month of February, numbers that came out on March 24th. Who would believe, in the midst of all this insanity that's going on, that unemployment in New Jersey would be 4.3%?
Well,
it doesn't seem it.
There's certainly there's a North Jersey, there's a South Jersey, and
Yes.
within South Jersey you have an East and a West.
Touche.
So, you kind of carve out South Jersey East, and you can figure out, what is happening.
Now, coulda, shoulda, woulda, and, if, ands, or buts, and all this. But just imagine if most of the last 35 years until the past 5 or so years, we were nearly recession-proof. Could you imagine if we had the booming job market that we always had for decade after decade after decade? I think New Jersey unemployment would be like 3% or something.
Yeah, so if you take a look, Harry, at the strength of the labor market, nationally speaking, it reinforces the view that the economy remains to be, in pretty solid shape. The March jobs report, for the most part, was good news. I know that you're going to probably want to throw cold water on that.
I mean, it is what it is. I mean, it ticked up to 5%, which I really don't even understand why, to be honest.
So payrolls were increased by about 215,000 for the month. Unemployment rate did tick up to 5.0%. The data that we're seeing suggests that a lot more people are entering the labor force. Average hourly earnings were up ever so slightly, actually better than expected, climbing 0.3%. They're up 2.3% for the quarter, Harry, based on annualized rate. So overall, the data that we're seeing suggests that while the economy may not be accelerating rapidly, it is in fact growing. And that is evident in the reports that we're getting coming out of manufacturing. When you look at the March ISM manufacturing index, it beat expectations fairly significantly. We were at 49.5. That was the number that in February. In March, we pushed through 50 to 51.8. And any number, Harry, above 50 indicates growth. So again, another positive sign. And this was the highest level that we have seen since July of last year. So if you get into the report, you'll see that the details were pretty strong. You have new orders showing a fairly large increase. So it looks as if the recent stabilization that we've had in oil prices and the decline in the dollar are both helping what is happening here within the manufacturing sector. I know that all of us, as Americans, were rooting for a very, very strong dollar, and we had it for quite some time. But unfortunately, that doesn't necessarily bode well for manufacturing, particularly when it comes to exports. So it kind of leads us up to the Fed. Janet Yellen made her statements, and when you look at it, she acknowledged that there was a fair amount of improvements in the economy, but it's very, very focused on what is happening outside of the U.S. You think about zero rate, negative interest rate policies in Europe and in Japan. Discussions that it might happen here. It's not going to happen here. So what it gets down to, the Fed is in no hurry, to raise rates. I mean, you think about last December, the first of many. We're going 4 times in 2016. So in all likelihood, we're probably going to see an increase in the summer, and we'll probably see one more in the latter part of the year. And obviously that is all, data dependent as far as where the economy's going.
And Chuck, this is simplicity sort of worded, but because of all these things that you just said, they almost have to raise. Right?
Yeah, exactly.
Or
I mean,
it's not intellectually honest then.
Correct.
If we're just faking out that it's better than it is, then So I think I don't want to see the rate increases, but we can't be in the near zero rate, level for a decade. I mean, any longer. So it is time, and it seems as though, Chuck, hopefully the markets are anticipating.
Well, Harry, if you look, the volatility has subsided significantly. And it's happened over the last month, and it's just, it's simply amazing that things that we were talking about, in January have sort of, taken a back seat. China, have you heard anything about China lately? No, nothing.
No.
So, that's just one of several.
I'll tell you the only thing I hear about China, that they have gone as far as they're willing to go in exploring and experimenting with capitalism, and they're spooked by it. So they're kind of
hasn't gone particularly well in certain parts of the country. So now, your favorite topic, GDP.
Yeah.
We expect first quarter GDP to be about 2%.
Yippee.
The economy is enjoying a number of tailwinds that have been helpful. One, very, very low mortgage rates. You talk about that, with Brother Bill.
Yes.
And rates seem to be fairly low. The consumer is getting healthier. We've seen some income growth. And again, we still have, even with the increases, we still have, on a relative basis, fairly low energy prices.
Why is our GDP so low for so long? I mean, I've often chronicled on the show, Chuck, that even during the Great Depression, there were many years, multiple years, where we grew over 3% GDP. Why are we not able to grow beyond
Harry,
fractional to 2%?
I think you have that answer.
I do. I'm just asking you because you're a finance guy.
Well, it's not hard to figure out. I mean, if you go several hundred miles south of here, there's your answer.
Okay.
All right. I mean, very, very simply put. So, so the expectation is we expect about 2%, in a quarter, which is better than 1, but certainly not at 3. So, we still have to concern ourselves with the weak growth overseas. It is a drag, on our domestic GDP. We do have a positive viewpoint towards the consumer sector. And as a result, we think that the real consumer spending levels have sagged in recent months, and ultimately that will, in fact, resurrect itself.
Closing comments, Chuck. I know you're going to talk about corporate earnings.
That's the last. Yeah, we'll finish up on this, Harry. So in another 7 to 10 days, corporate earnings are going to come. We think there's going to be some weakness. It's not unexpected. Results should improve later this year. First quarter.
By the way, top line, bottom line, or both?
I think you're going to see it in both, Harry. So the first quarter earnings results, we anticipate numbers are going to show year-over-year decline. However, we think that we're also bottoming at this point in time. So we expect to see better results in the second half of 2016 as those headwinds from the oil down, dollar up dynamic, that is now subsided somewhat. So, the global economy remains a little rocky still, and they're leaning on, again, the infusion of the monetary policies that we have chatted about in some regions. So equities, I wouldn't expect, Harry. I would expect some consolidation here. You've made a big move in a relatively short period of time. The move yesterday that we had, the move that we're seeing today, it's actually very, very healthy, for the equity market. So I think, you think about what we worked through in the first quarter, it's just simply amazing that we finished the quarter in positive grounds. And again,
I think it's amazing too.
Emerging markets and high yield were the best performers. And as you look at the sector, sectors within the S&P 500, Harry, telecom, utilities, consumer staples were our strongest year to date. The weaklings, financials and healthcare.
We have a hard break in 30 seconds, Chuck. I just want to add to what you just said. I was expecting it to take many more months into this year to make up for the start that happened. It happened, and the recovery happened very quickly.
Well, remember, Harry, a fair amount of that is also due to short covering.
Good.
There's comment. It's not just all upward bias buying. There's a lot of shorts that we're covering along the way.
Chuck, until we meet again 1 week from today at 8 o'clock, have a great day.
Thanks, Harry. You too.
My opinion is Chuck Malamut is the best in the business at what he does. For all of your financial planning needs, turn to Chuck and his group, the Malamut Group, at their Morgan Stanley Northfield office, 609-383-2010. The following program that was so melodious that you just listened to is presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. If our next panel is right on time, we will have exactly 10 minutes and a very important discussion about Alzheimer's disease coming up next.